And shoulders reversal pattern forms after an uptrend, and its completion marks a trend reversal. Now the pattern contains three successive peaks, with the middle peak, which is the head, being the highest, and the two outside peaks forming the shoulders. Now these shoulders are lower than the head, and they're roughly equal in size. The reaction lows of each peak can be connected to form the support, or what we call a neckline. Other parts playing a role in the pattern are the volume, the breakout, the price target, and the support that actually turns into resistance. We'll look at each part individually and then put them together with some examples. So let's take a look at the head and shoulders pattern on ADM. Now we want to see a prior uptrend, and it's important to verify that the stock is in an uptrend for this to be a reversal pattern. Without a prior uptrend to reverse, there can't be a head and shoulders reversal pattern, or any reversal pattern for that matter. Now the first thing that forms is the left shoulder. While it's still in an uptrend, the left shoulder will form a peak that marks the high point of the current trend. After making this peak, a decline occurs to complete the formation of the left shoulder. The low of the decline usually remains above the trend line, keeping the uptrend intact. Once the low from the left shoulder forms, the price begins to move up and we exceed the previous highs. This marks the top of the head. After peaking, the low of the subsequent decline marks the second point of the neckline. The low of the neckline usually breaks some type of trend line, like a moving average. At this point, we start to question the strength of the uptrend. After the head is formed, we want to watch for a right shoulder. From the low of the head, we form a right shoulder. This peak is lower than the head, which is a lower high, and usually is in line with the high of the left shoulder. While symmetry is preferred, sometimes the shoulders can be out of whack, and this decline from the peak of the right shoulder should break the neckline. Now the neckline forms by connecting lower points, so connect point 1 and point 2. Now the lower point at mark 1 ends the left shoulder and begins the head. The low point at 2 marks the end of the head and begins the right shoulder. Depending on the relationship between the two low points, the neckline can slope up, slope down, or be horizontal. The slope of the neckline will affect the pattern's degree of bearishness. A downward slope is more bearish than an upward slope, and sometimes more than one low point can be used to form the neckline. Here we have a chart on Boeing. As the head and shoulder pattern unfolds, volume plays an important role in the conformation. Now volume can be used as an indicator. This decrease in volume and the new high of the head, together they serve as a warning signal. The next warning sign comes when the volume increases on the decline from the peak of the head. Now the final confirmation comes when the volume further increases during the decline of the right shoulder. Let's go back to ADM and take a look at the volume on the formation of the right shoulder. As you can see, the volume is decreasing. Now once we have these confirmations, we want to watch the neckline. The head and shoulders pattern is not complete and the uptrend is not reversed until the neckline support is broken. And this is very important. Ideally, this should occur in a convincing manner with an expansion in volume. And as it occurs in many chart patterns, your support turns into resistance. Now once support is broken, it's common for the same support level to turn into resistance. Sometimes, but certainly not always, the price will return to the support break and offer a chance for a second sell. After confirming the break in the neckline, the projected price target is found by measuring the distance from the neckline to the top of the head. Now this distance is then subtracted from the neckline to reach a price target. Any price target should serve as a rough guide, and other factors should be considered as well. And these factors might include a previous support level, Fibonacci retracements, or maybe a long-term moving average. The key to head and shoulders pattern is to be patient. Watch for the formations, watch for the neckline to break, and then watch for that support to become resistance. And this may take several days or even several weeks for this pattern to develop. Once you see that support broken, and once it turns into resistance, you really want to use some type of moving average or some key support level or resistance level to confirm the pattern. As you can see in Boeing, once that neckline's broken, the volume to try to get back up through the 50-day moving average is weak, and we continue to bounce off of the moving average and the price falls further down.